Dear listeners, welcome back to our special radio series, Understanding GST, brought to you by the regional news unit, Akashvani, Kohima. In our second episode today, we shift our focus to the next-gen GST reforms, a major step forward in simplifying and strengthening India's tax system. What are these upcoming reforms? Why are they being introduced now? And how will they benefit taxpayers, businesses and the government? To answer these questions and to help us understand the objective behind these reforms, we once again have with us Mr. Merenkaba, Commercial Tax Officer from the Taxes Department, Government of Nagaland. We welcome you, Mr. Merenkaba, once again.
Thank you, ma'am. Thank you, ma'am.
To first begin with our questions, could you start by explaining what the Generation Next GST reforms announced by the Government of India are all about?
Yes. This one is much awaited and much anticipated reforms that are brought by the Government of India. And I think it's better that we'll go a big lengthy explanations. This is brought by the 56th GST Council meeting held on the 3rd September 2025. And one of the most important thing here is that it is the simplified GST structure. When I say the simplified tax structure, it replaces the old regime, the older, the first generation GST, where the standard tax rate was very complicated. It is 5%, 12%, 18%, and 28%, apart from the other sub rates. But with these second generation reforms, GST, this is now simplified to only two rates.
Okay.
The 5% for essential items, which is under the called the merit rate in our tax terminology, and 18% standard rate for all others.
Okay.
Plus, another one thing is there, that is 40% demerit for luxury sale and demerit goods like tobacco and palm masala. But they are very small items that are come under the 40% tax bracket. So almost all items now is come under the 5% and 18% respectively. And other mature reforms of this is tax relief for essential goods. That is full GST exemption on individual life and health insurance policies. Essential goods such as ultra-high temperature meals, UHT meal we usually call it, and paneer and Indian breads in the sense that the roti, paratha, or whatever we used to call it, all these are now exempted under GST, nil rated GST. And I want to explain a little further on this. For consumer goods, that is a mass consumption goods, like the small cars, TV, air conditioners, cement, which is one of the most important material for construction activities, which was earlier under 28%. All these are brought down to 18%. And one more important thing is that for renewable energy, which is very much talked about, and actually the desire for the environmental protections, it also come down from 12% to 5%. And one good news of this generation second reforms is medical health devices. 33 life-saving drugs have been reduced from 12%. Earlier was 12%, now it is nil. And especially for 3 critical drugs used for cancer and rare diseases, earlier it was 5%, now it is nil. So thereby this generation, second generation reforms is strengthening the healthcare access to all the citizens of the country. And one more thing is that this second generation reforms also take care of the agriculture and rural sectors. For example, the machineries like tractors and harvester and composter, which was earlier taxed at 12%, now reduces to 5%. And moreover, the fertilizers, that is input to manufacture fertilizers with sulfuric acid, nitric acid, there's ammonia, there's inputs for fertilizers, is also reduced drastically from earlier 18% to now 5%. And labor-intensive goods like the handicrafts, marble, leather items, GST is reduced from 12 to 5%. One more important thing that I want to add is trade facilitations in dispute resolutions. The Goods and Service Tax Appellate Tribunal will be operational by December 2025, which was actually much desired by the business community in the country. So in that case, I think the second generation reforms, as far as possible, it takes care of all the sectors in the country.
So what motivated the government to introduce this new GST reform at this stage? Are they more focused on simplification or compliance or expanding the tax base?
I should say that is put a tray Put a tray has been taken care of by the second generation reforms, that is simplification, compliance, and expanding the tax base. But another thing that I want to add is, after the introduction of GST, there was weighing cry from all sides. Somebody used to say the comparison tax also. So because of some complicated in the tax rate, also many goods come under 28%, which is comparatively high GST. Because as we discussed earlier, GST is indirect taxes. So it pinch all the income level people at the same levels. You are a very poor person, suppose, but you are paying the same tax. I'm a very rich person, I pay the same tax. So in order to do away with all these things, the second generation reforms, you see that it not only simplified this structure from the only two slab, from the four slab earlier, but almost all the essential commodities is brought under the 5% tax rate, which is very minimal, I should say. And another thing is that why it affected compliance is that earlier for the business community, it is very, somewhat is little difficult to file, and it's a little complicated because a particular, suppose you're a hardware shop, but you are dealing with different kind of goods. Some are taxable at 18%, some are 28%, some are even 12%, some are even 5%. So filing process also a little complicated to maintaining the stocks, the box accounts, maintenance, all these things was there. And any grocery items also, some are exempted, some are 5%, some are 12%, some are even 18%. But because of this, now standard is slapped to only 5 in 18, it will be very much easy to compliance also. Moreover, the concept of any kind of this kind of reforms is that expanding the tax space. See, the concept here is higher demands reduces GST rate, make goods and services cheaper. Once it is cheaper, the increase in household savings is stimulating consumption, especially in essential employment-intensive sectors. So that means you are paying less, suppose, because of the price is drastically reduced, then your saving will be rise. So this kind of multiplier effect will benefit the economy as a whole. On the one hand, it seems that you're reducing tax rate. But on the other hand, because of this, people income increases, demand increases, and compliance also become much easier. So now people are they will voluntarily register also. So according to the tax base is also increases. One more thing I want to add is that I think the government is also thinking about this because even if they want the reforms, if the revenue is not stabilized, what can we do? At the end of the day, the government is run by taxpayers' money. But because of the GST, the indirect taxes was hovering around the 8.6 lakh crore in 2016-17 before the GST is come. But after the GST now in 2023-24 alone, the collection was indirect taxes is more than 20 crores, 20 lakhs crore, I can say. So it is more than doubled within the span of 7 years. So the government might also, the policy makers might also think that now is the right time to give back the benefit to the consumers, to the citizens of the country, because somehow the revenues also stabilized to a certain level.
What are the key benefits of the Generation Next GST reforms for everyday consumers, especially people who buy goods and services regularly?
These second generation reforms, I think, and I go back once again, that the government might think that it's high time to give back the benefit to the consumers because of these reforms. When other revenues increases, why don't we give back something to the consumers, to the citizens of the country? That's why almost all the essential items now, it is reduced to 5%. And moreover, there's exempted goods for all the mass consumptions. And one more thing that even even in hotels, the lodgings and services, you see now any rooms, any lodgings, per day, if it is only 7,500 and below, the rate is now reduced to 5%. So it boosts the tourism in all over the, especially state like Nagaland. Earlier it was 12%, but it's now reduced to 5% because of this one. So definitely all this benefit the consumers. There is some nitty-gritty that how it will be actually translated to actions because some under process this and that. But at the end of the day, sooner or later, these reforms will benefit the consumers in a very large scale, because you see, from 18%, almost all goods are reduced to 5%. There's a drastic reduce of 13%. Well, there's a very good. For every 100 rupee, earlier was paying 18 rupees. Now you're only going to be only 5 rupees. So as a increasing of real income, the purchasing power will increase. That's what actually intended to benefit the consumers.
Will these reforms make goods and services more affordable and impact pricing in it anyway? And also, I wanted to ask you, because now the pricing that is now available,
Yes.
how is it going to impact?
Now the detailed guidelines is being coming up now only because
Okay.
the reforms is only as on 5th September this
Yes,
morning.
yes.
So actually the guideline is that whatever it is already in the market, that means from already out from the industry, some are in the stock, some are in the chain of distributions. All this the government has advised that, and it is expected actually, that they should transfer the benefit to consumers in a form of, if it is in the stock, then they are supposed to. The advice is that the base a new MRP.
Okay.
The direction now is that they should not rough away the old MRP also.
Okay.
So there will be two MRP, which are already
Acha,
decided
okay.
in the market,
Okay.
so that the consumer will come to know that what actually benefited them. Suppose early MRP, it might be suppose 118. Yeah, let us just go back to the early examples. But the new MRP will be 105. So the consumer will know that now I'm getting 13 rupees, okay, because of this GST. Now, but advise that whatever already in the retailers, whatever they are going to the solid after the implementation takes one, they are supposed to transfer the benefit to that. That is the guidelines.
But how is this new GST framework expected to benefit the small entrepreneurs and startup or businesses in general?
The second generation tax reforms. We are repeating one sentence again and again.
Yes,
That
yes,
is the simplified tax structure. Once it is very simplified, it will be very easy for anybody to comply with it. The simplification lead to compliance. Okay, and the compliance lead to tax base increases. That's a chain reaction only. So when the tax structure is simplified, it will be very easy for the budding entrepreneurs or the startup business, or in fact in business in general, to compliance in all these things. And one more thing that I want to add, that as we discussed in previous episode also, this particular GST second generation reforms propose that any application for registration, right now it is 15 days, right now. But now the proposal is that once this second generation reforms is chalo karega, then within 3 working days, if it is not category, the application is, it will be, registration will be approved within 3 working days. So I think it is good for the budding entrepreneurs also. But one more thing that is, when we say that the budding entrepreneurs is small business, we always talk about the MSME.
Yes.
Because MSME is one of the crucial contributor of the nation's incomes. And because of the reduce of the tax in institutional commodities and inputs also especially, then these are actually our daily uses, like sapan, garnishina, toiletries, all those things. Almost all are manufactured by MSMEs. And all these are tax rates reduced, some are from 18 to 5%, some are from 12 to 5%. Then it encourages the MSMEs in the startup, because one of the fundamental problem earlier, the first generations, let us call it the first generation,
Yes,
because earlier, since it is second generation, there was a problem in what is called the inverted tax structure. Inverted tax structure. Suppose I want to explain one point here is that your clothing, me and you, we are wearing the clothes. It is 5% only.
Yes.
But the yarn is taxed at 12%. So the input is goes later than the output. So that is called the inverted tax structure. That problem was there not only in the clothing things, but it is in the later. Suppose the later is actually when you brought the later, it was 12%. But output is only 5%. So this kind of arbitrary is always refund process, this and that. But there was always problem. So now it is reduced to 5%. Even the yarn is reduced to 5%. The later is reduced to 5%. See, the clothing is mature almost all. In fact, is produced by MSME. So all those things help the startup to enter the market. That now is not very easy to comply. Nothing is such. Of course, here in there is still problem is there, but that 90%, 80 to 90% that inverted tax structure problem, which was earlier, is now removed because of the simplification tax rate. So it helps a lot for the MSME in the startup. And one more thing that I want to add here is that India has a huge populations. It is now 140, more than 140 crore. So 1% increase in demand for essential items, which are manufactured by actually the MSME, increases, in fact, it multiplication effect on the MSME sector. So with this very wonderful reform, it's high time for the next generation entrepreneurs in startup to step in
So how will this new GST system improve transparency and consumers when they pay taxes on purchase? Do these reforms also aim to strengthen the system against tax evasions or and invoice frauds? If so, how?
Yes, it is not because of the seeking generation reforms.
Okay.
It is a brief sake that this particular question is very important in the sense that as far as the consumer is concerned, the consumer has nothing much to do here. The part is that down to invoice GST invoice to mangyabo lagi when you are purchasing from the invoice from the GST registered dealers. So invoice is a must because in fact in the Act itself under Section 122 they are supposed to issue invoices, tax invoice. So the question is that for part the consumer parts too, you are paying taxes whenever your buy goes, and it's your right to get the tax invoices. Number one. Number two is that return filings. We discussed about that earlier.
Yes.
The return filing means tax tiya laga se to. So whenever you are filing return to the dealers, the business people, that is all your self-assessment filing. If something is not okay from our side, that taxes always will always step in for scrutiny and assessment if they are suspicious. But the question is very valid in the sense that the second part is that do these reforms also aim to strengthen the system against tax evasion and invoice fraud? Of course, this particular second generation reforms, this subject is not touched, but actually it was there from the very beginning. See, earlier we discussed about the late fee and all the simple things, but in GST, it will because the penalty is so huge, but nothing may happen, but if something happens, you will be in trouble. I just want to say something here that tax evasion, we divide into these two. One is the other one is so you know it, but you deliberately done it. And deliberately done it is a very serious one. But even if because of some mismatches, because of some late filing by counterparty in this and that, it might so happen sometimes. Sometimes clerical mistake, this and that. So even under this one, we usually used to issue notice under Section 61. It's just a scrutiny of your accounts and you are given the opportunity to explain on time. We usually the notices would be 30 days. But if we found it that actually it is tax evasion, not deliberately, but is a tax evasion, of course, 100%, then you will be charged under Section 73. In under Section 73, what happens is that you are supposed to pay 18% interest and 10% penalty or 10,000, whichever is higher. Now the question is, suppose you evade a tax of 5,000 only, suppose. Of course, the tax 18% interest will be per annum, but your penalty will be 10,000. So for evasion of 5,000 tax, you are supposed to be penalized with 10,000. Minimum penalty is 10,000. Okay, this kind of thing is very stringent, somewhat we can say. But as far as the fraud is concerned, invoice fraud is fraud, nothing to explain it. And tax evasion deliberately done it, then you will be charged under Section 74, and it is a very serious one. Once you are charged under Section 74, you might impose a interest of 24%, and penalty might be increased up to 100%, or 10,000 is whichever is higher to higher. It is one barely severe 73 degree. But anyhow, suppose you evade a tax of 1 crore, then 100% penalty means you are going to pay it 2 crore plus 24% interest to high. So it is a very strange. Not only that, suppose if you evade a tax or if you make a fraud of 1 crore, we call it 100 lakhs to 200 lakhs, then you might be even sent to jail for 1 year. And if the fraud is 2 crore or 5 crore, it is 3 years. In 5 crore and above, it is 5 years. Forget about the amount. If the one person is continuously doing again and again, then you might be even sent to 5 year jail term. So that's why sometimes it so happens that penalty is pretty harsh. In reality, I'm explaining about reality, not the department concerned. Penalty is so harsh. So sometimes the tax official might be little lenient that murumbi lagi do na manuti na ita na tati. Inagabi ho pare. But what I want to make sure to all the listeners is that don't take advantage of the leniency of the tax officials. Sooner or later, to pakarna to rebulias ito, because it is only transparent. If you haven't paid the tax, you haven't paid the tax. It is not like earlier that PGD pekterity chalan banana Hollywood law kotan no ito. It is during the real time. At this point, you had done something about the 1 crore, but you file it nil. You cannot say that I'm going to file 1 crore now. Because you have to pay something now. Because the previous money is already gone. You cannot amend it and file it again. So likewise, because it is a real time. So My advice to all the listeners in the business companies that don't take the advantage of the leniency of the taxes officials. Sooner or later you will be caught up.
Well, to my next question, when is the government planning to roll out these reforms nationwide, and what measures are in place to ensure smooth transitions and minimal disruptions for taxpayers?
This is going to be enforced on the 22nd of September this month. That's why it is called a Diwali gift by our Prime Minister. So, of course, one more thing here is the main problem now is that how to immediately transfer the benefit to the consumers. All of the dictator because for business community, as we discussed earlier, after 22nd manufacturer quality problem now problem is there. But in services TV ko nai mando kilimani service to real time service to na. Suppose you book in an hotel on the day up to the second, then you will be only 5%.
Okay.
So that will be good problem nai. Because it's a service.
Yes.
But someone bigger problem goes there. How to transfer the benefit to consumers? Because most of the goes to retailer la to one day. And it is not a die chanegina kurano but retailer can do ne chanegina bit na. Even if he wants to transfer the benefit, he don't know how to do it. Another thing though, some are in the stock, some are on the line transportation na.
Yes.
Because you see the ghost transport weeks and weeks so business cannot stop.
Yes,
People will not wait for the 22nd for these things in lock up the stock now. The business is a blue concept, it is going on and on. So let's go back again. The Indian Pharmaceutical Association did already advised the retailers to comply with it and benefit transfer the benefit to the consumers. Number one. Number two is that even consumer affairs laga ministry laga direction be directive be to us na MRP purana bi rakibu notum bi rakibu so the people will come to know that actually benefit ame paishide. Not only that, the government, as far as the central government is concerned, definitely the state taxes department will also follow till December 31st, if I'm not mistaken. Then the field stop can the direction be taken as a day, especially for industrial commodities. They should monitor to see that whether the benefit is transferred to the consumers or not. So definitely state government be state taxes be, I'm sure that will also do, because sometimes knowingly or unknowingly manual benefit to transfer so all these directions is there. Of course, business community currently all of to book given this in that adjustment garden all of to dictate because on the other hand, one more thing I want to add here is that for the benefit of not only the consumers but especially for the business community. Suppose earlier your goods was taxable. For example, UST, ultra health milk tune, it was 5%. And educational items, all the books, the clothes, pencils, it 12% also nil educational items. To earlier the tax also they do input to accumulate also because they become the tax to. So this are actually the role is very clear. If you go back to the section 18.4 of the GST Act, whatever was taxable, but now it is exempted, you are supposed to reverse the ITC. Because if you don't tax you brought it, tax is not reduced, it is exempted totally. Then you cannot use that in another way. So all these things, accountancy, well, a problem over business community can. But I think that we should. We'll move on.
Yes.
My only advice to, especially the business community, is that please shift the benefit to consumers because that was the intention of the government. Because once the demand increases, definitely they also get more benefit.
Well, finally, what message would you like to convey to our listeners about the Generation Next GST reforms?
My simple message to all the listeners is that for who are willing or who are planning to have entrepreneurship or start a business, whatever, it's the right time. It's the right time. Also say that India is a huge population. Even 1% increase in demand is a huge market. And because of the removal of the inverted tax structure to a large extent and simplification of the tax rate, it is very easy to comply now. So it is the right time for the especially small scales and the bottom entrepreneurs to engage in business. Number two, consumers. The most important thing is that actually you are the one who is paying the tax. So we should aware our rights, right? So consumer also, come 22nd September, you should ask for the new price. Otherwise, Nobody knows. So at the end of the day, how much benefit you are transferring to us, to only you can able to negotiate it only when you know the system, only when you know the rules. And now though from 22nd, you know that, see, just one example, bread and paroda, this earlier was 5%, now it is 0. Then if a shopkeeper asks the same price as earlier, then he's wrong. Then we should also know our rights. Okay, USD 5% it was now, and this oil and all these things, edible oil, it was 12%, now it is nil. So for every 100 rupee to toast order it is grow like after 22nd.
Yes.
Because they cannot say that mido puila livestock asito. No. We should know our rights. For na stock be hobi, no tumbi stock be hobi. Now from 22nd September, you should know your right. And business community, they should know the duty in the sense that they cannot sell by the same old price. Even if some mistaker is there or not, that one is already old stock, taganiko direction banai, carbon agency can be kuanai, your own association be direction hanai, but make sure that after 22nd, you sold your goods at the right price by transferring the benefit to the consumers. That's all I can say.
Well, thank you so much, Mr. Merenkaba, for sharing your insights to us and to our listeners. I'm sure our listeners will be benefited from this conversation. Well, with that, we conclude today's episode of Understanding GST. We hope you have a clearer picture of the next generation GST reforms and the goal they aim to achieve, from enhancing seas of compliance to making the tax system more transparent and efficient. A big thank you to Mr. Merenkaba for sharing his insights.
Thank you, ma'am.
To our listeners, thank you for tuning in. Join us again in the next episode as we continue to unpack key aspects of GST system in the way that is simple, relevant and informative.